Just joining us, this is Taking Stock on Bloomberg. I'm Pim Fox. Okay, since hitting a low in March, like a lot of things, shares in Boeing, they've climbed 80%. But given the global recession, the delays in the 787 Dreamliner program, and the pressures facing defense programs, how much further has the stock got to run? Let's find out. We've got an expert. We've got Alex Hamilton. He follows aerospace and defense at Jesup and Lamont. Alex, good to have you with us. Thanks for coming in. What's going on with Boeing? We had the delay, and everyone kind of went, yeah, all right, we figured that was going to happen. Another delay with the 787. What's the story right now with the Dreamliner and commercial aerospace?
Well, at Boeing, obviously, we had the delays on the 787, which obviously was baked in. We also had a little bit of a management change. The person that was running defense is now running commercial airplanes. Surprise, surprise there. So at least they're moving seats around. I think they're making progress towards sort of framing out uncertainty. I would argue on the margin that's a good thing because you know as well as I do, Wall Street hates uncertainty. I've been a hold on the stock for a variety of reasons. I think we have the headwinds of the 787. We still, even though there's a guideline for when it's going to come out, I will believe it when I see it.
When you fly on it.
Exactly, when that happens. And also, remember, half their business is defense. And I think this is going to segue into what we're going to talk later. But defense budgets are under pressure. I come from kind of the old school when it comes to analyzing Boeing. You don't really want to invest in the company until the order books or the orders start ticking up. We've seen no evidence of that yet. Right now, all the conversation between me and investors is, okay, how cheap is the stock and how much of the order book is going to be canceled? We've yet to see really sort of an influx of orders. That, and when we start getting evidence that that's going to happen, then I think it's time to buy the stock. So I argue that the stock has gotten a little ahead of itself.
You want to see some evidence in the real world.
That's right.
When you talk about the airlines, though, let's just talk about the Dreamliner, for example, and the orders. I mean, we haven't seen any big orders coming from U.S. air carriers. What about the order book there? Because we had the AMR financing last week. It looks as though at least the business travel has stabilized to a certain extent. Is it possible that we're going to see a pickup in the health of the airline industry, and then that will segue into what's going on at Boeing?
Yeah, and I think we are starting to see improvement there. Kind of backing up a little bit on the 787, the big bull argument is, look, if we look at the order book, 80% plus of that order book has been international airlines. Domestics have yet to order, so they're going to come in and order, or they're going to sit there and absorb some of the cancellations. And certainly we haven't seen widespread cancellations, but certainly it's something that sort of keeps us up at night. I would argue that on the margin, airlines are getting better. If we look at the RASM numbers, those are starting to improve. And
revenue per available seat mile,
that's right?
I love that, RASM.
And I think what's going to happen is, we've had a period where traffic has really come down. We have a period where capacity has come out of the system. So what's going to recover first on the cycle? Is it going to be flying aircraft more, or is it going to be ordering aircraft? I would argue it's flying the aircraft more. You're going to take these aircraft that you parked in the desert, and you're going to bring them back and you're going to utilize them. And that's why I've been positioning investors towards aftermarket.
Right.
names.
You were talking about that in your most recent note, right? Which is go for the aftermarket. Don't go for the other equipment manufacturers. Go for the aftermarket.
That's right. And, the pushback to me could be I'm being very cautious. By the time we see the evidence on Boeing, it's too late. And that might be true. I'm sitting here trying to splice. Is the recovery in Boeing on the order book side going to be 11 or 12? Here on Goodrich and Rockwell Collins, which are two names that we do like, half of their business is aftermarket. So the more an aircraft flies, the more the
more demand for their products. All right, we're going to continue. We're going to continue the conversation with Alex Hamilton. We're going to talk about Rockwell Collins. We're also going to talk about a Goodrich. Find out why that are two of his top picks. This is Taking Stock on Bloomberg. This is Taking Stock on Bloomberg. I'm Pim Fox. Okay, some new names are emerging in the defense field, companies that are positioned to protect armies and countries against cyber warfare. With more of the military going high-tech, is this the time for investors to explore these new options? Well, let's take a bit of the pulse of the market. We've got Alex Hamilton. He's an expert in the world of defense at Jesup and Lamont. Alex, so we were just talking about the aftermarket. Let's just continue that for just a second. Sure. Rockwell Collins, Goodrich, you like these because, as you say, they're just going to fly the planes more if indeed we get more passengers.
That's right. Goodrich, in particular, is a razor blade model. They invest heavily to get on new aircraft, and then when these parts wear down, there's only one person you can go to replace them, and that's Goodrich.
And these are things like braking systems, right?
Braking systems. They do all in-production aircraft for Boeing. They'll do the evac slides on aircraft. So obviously, the more they get maintained, the more stuff breaks down. There's always FAA mandates as to when you have to replace parts.
And they're getting they're getting very strict, right? I mean, they're really going to the letter of the law on all of these FAA regulations.
That's right. And the key here is a lot of the aircraft, if you look, I don't have the numbers with me, but if you look at the numbers of the aircraft that have been parked in the desert, okay, most of them were aircraft that were about to hit their heavy maintenance. And Goodrich makes the nacelles that go around a lot of aircraft, and that's the real heavy maintenance part. So my thesis has been when those aircraft come back in, because those are the newer aircraft that are going to come in, you're going to have to spend the cash to maintain them, that what that's going to do is that's going to be an inflow to the cash flow at Goodrich.
All right, so pay attention to Goodrich, pay attention to what's going on at Rockwell Collins. Shift the topic now just a little bit, talk about the world of technology and defense, because you're not talking about the big, heavy, defense systems that we all have learned to understand, but this is really like cyber and technology warfare, right?
That's right. Cyber, at the end of the day, is the trend going forward. You always want to invest where the money is, right? Bernard Baruch, one of his famous sayings. Now, if we look, we know that defense spending is under pressure. We know that there's lots of future combat systems being canceled, F-22 is being canceled, and that's going to be the trend going forward. But the one thing that President Obama has come out to start it with the Bush administration is cyber. There's the cybersecurity initiative coming out of D.C., and that's basically to prevent hacking of computers. If we look, the most recent example of what's frightening is the Russia-Georgia conflict. Georgia woke up one morning and they see tanks in their backyard. Well, that's because apparently what the Russians did is they hacked into the computer systems and no one could see them coming. So it's a very frightening thing, and there's going to be lots of money thrown at it.
All right, so battlefield technology, but not the kind of technology that's used to, let's say, launch missiles or so on, but this is really these computer networks. So talk about the companies. What are we talking about? Mantech? Are we talking about NCI? What are the kinds of companies?
We're talking about Mantech. We're talking about NCI, and another name that I like that has a good cyber exposure. The ticker there is SRX. SRX in particular does very high-end consulting, data mining, looking for patterns in cell phone conversations.
So this is also a homeland security terrorist issue as well.
That's right. And, Mantech does the same thing. NCI is a little bit of a smaller company. NCI and Mantech have the best organic growth in the space, and that is what analysts use as a measure to see the revenue dollars flowing in. Because part of the problem with cyber is we don't really know how much money is going to be spent on this. A lot of this is intelligence spending. A lot of it's coming from...
It's classified. You don't even know who's going to get the contract.
But what we will see is organic growth starting to tick up. In other words, your top-line revenue growth improving. They might not be able to explain why, but based on all the rhetoric, all our sources in D.C., money is going to be spent there.
All right, if money's going to be spent there, and these are the kinds of companies that you think people ought to position themselves to be in, is there any kind of pushback? Is there any kind of thesis that says, it's really still going to be all about boots on the ground? Or are we going to a situation where the defense industry really is just going to be about, the laptop in that battlefield scenario?
I don't think there's a lot of pushback there. Where there's pushback, kind of peeling away the layers of the onion, is potentially the valuation metrics relative to the defense names, that they're just going to be thrown in the whole basket. I don't want to own defense names. Budgets are under pressure. You really sort of have to peel it away a little bit and sort of differentiating what Mantech does versus SRA. And there's a lot of prime companies that do these services, but the reason I talk about Mantech, NCI, and SRA that we're focusing on here these are the pure play names. There's lots of names out there that are involved in this, and I was actually a little surprised today that there wasn't more of a follow-through on these pure play names, being that Dell announced the acquisition of
Perot Systems, right?
A lot of I don't know Perot Systems intimately, but a lot of what they do is federal contracting.
What about M&A in this field? I mean, are these going to be targets, you think?
Guaranteed 100% it's going. I know I'm not supposed to say guaranteed, but obviously we need to look at what the trends are. If defense spending's coming under pressure, I'm a defense prime and I need to boost up my organic growth rates, you need to buy these pure play names.
You can buy it rather than build it. All right. Thank you very much, Alex Hamilton. Guaranteed to be interesting. Let's put it that way. All right. Alex Hamilton coming to us from Jesup and Lamont, an expert analyst in the world of defense and aerospace.